All right, we are live. How you doing, friends? Ernie here, and this is the Zero DTE talk show. We got to turn this guy off over here. There we go. That's my monitor. So today, Monday, the first DTE or Zero DTE opportunity of the week, and we did pretty good. Actually, it started out not so good. We took a trade from last night. It certainly looked like the market was pulling down, continued to pull back and move down. So I had called for a more bearish trade. And that was around 9 o'clock last night. I went to bed. I woke up early, probably around 5 o'clock, and saw that since midnight, the market had gone straight up, and there was no news, there was nothing. And I thought, man, what could cause the market to go straight up? The European session hadn't even opened yet. The Asian session, they're doing lousy over there. So, what is the impetus? What's pushing this thing up? And then, early in the morning, Bloomberg comes out with a report saying how the Euro markets were doing well, and they kind of lifted up the U.S. markets. I'm thinking that's such bullshit. It's disinformation. So the only conclusion that I have is that maybe it was the PPT. That's right, the plunge protection team at work in the wee hours of Sunday morning, because I have never seen a Sunday morning where we had such a reversal, a 50-handle rise in the morning on Sunday morning. That just doesn't happen. And with no news, no nothing, no catalysts, nothing. I suppose, you could take it like the Big Bang Theory, when there's a complete absence of anything, then the only thing that can come out of nothing is something big, a bang. So that's what it was. It was the Big Bang Theory. But anyways, we got out of that trade early. And like all of our trades, we take this inversion of risk principle, asymmetric risks, right to heart. Our risk was very, very small. So we got out of that trade on a single minimum size position. The risk to reward ratio was about 1 to 10. So 1 part risk, 10 part potential reward. The total that we took on right there, I think the max risk for a minimum size position was about $112 or something like that. So we were able to recover half of that. So the actual loss was about $60 or so. And okay, no big deal. Then I'm watching the market, and of course, the night before I had issued 2 possible scenarios, a down scenario and an up scenario. And I thought the down scenario was the better choice, so that's why we went with that. So after we got out of that, I said, hey, let's go for the up scenario. So we went for the up scenario. And I was waiting for a particular thing to happen. There was a tiny little bull flag that was about to break. And I said, man, when that breaks and gets above that volume node, it's going to run. And so we jumped on it. I picked a target almost to the penny of where it ended up today. And so most people got out of the trade with about anywhere from a 400 to 600% return. And there are a few people in the group that have a slightly, those are the people that maybe only put on one position at a time. There are a few people that will put on multiple positions, and this is a strategy we've talked about where you take a few of those positions off after you've achieved enough return to essentially pay for and give yourself a free ride for the remaining positions. And so those people just let it go and let it ride right into the close. And if you had done that, you would have received about somewhere between 1,000 and 1,100% return. Now, I know, Zero DTE, that is unheard of. that is unheard of on everybody else's Zero DTE strategy and methodology. So there's a service that I know of that's called ZeroDTE.com. Do not confuse that with this. This is Zero-DTE.com. That dash makes all the difference in the world between getting 1,000% return and getting a 5% return, right? That's what they do over there. There's plenty of other Zero DTE services that are out there, and others that get on the web, and they're talking about how they use thousands and thousands of dollars to make $1,000 for the day. When we can make $1,000 for the day and use 1/20th the capital that they use. Let that sink in. So let's say that we're making the same amount of money for a day. Who's the winner? The person who used all their capital, or the person who used a small fraction of their capital? Now, of course, that's kind of our normal modus operandi. Most of our trades are, I would say on average, if you took all of our trades, we're probably doing somewhere between 150 and 200% return on our risk on every single trade. And then every once in a while, and it seems like this is happening more often, but I tell people, look, we really shouldn't be counting on these big wins more than maybe 10% of the time. The rest of the time, we'll take fantastic wins, 100, 150, 200% of our return, the return on our risk, which nobody else does. And then every once in a while, maybe 10, 15% of the time, we'll take a small, tiny little loss. And then about 10% of the time, we'll have a mammoth winner. Now, there's a spectrum in between there. So sometimes we'll make, as much as 300, 400%, sometimes as much as 1,000%, but most of the time around 100, 150, 200%. Now, that's how we operate on our Zero DTE strategy. I can guarantee you that there is nobody else out there doing it the way we do. Absolute guarantee. If you'd like to try this for yourself, you can get in on the action. We offer a 4-week trial, 4 weeks. And if you decide after that 4 weeks or any time in between to go with the service, I'll refund that entire cost of that trial. It's very small. It's like $20 a week. And the reason why we charge that $20 a week is that there's a fair amount of hand-holding and setting up, and then also this intense support that we provide, because we treat you just like you're an actual full-fledged member when you're on the trial. So, we figure that, I figure that, it's a fair price to pay, to make a couple $1,000 in a week for, putting out a couple $100. Yeah, sure, you can pay $20 for the week for that privilege. I think that that's okay. I think that's perfectly okay. And then if you decide to go with the service, I'm not sure why you wouldn't, I'll give you all of that money back. All the money you paid on the trial, I'll refund to you. And so, that's the way we're going to roll from here on in. I have a slightly different pricing structure coming up at the end of the month, where I'm offering quarterly and yearly subscriptions as well as the monthly. So you can take advantage of that now, or you can do the monthly that we have now. So I think that you'll enjoy this service a lot, whether you're an experienced trader or a brand new trader. If you're completely new to futures and options, I will hold you by the hand and show you how to make money. I will show you, our most difficult or our most challenging customer is someone who's steeped in the old ways, who is risk adverse, who is sitting there all the time trying to manage their risk. We do not manage our risk. We never manage our risk. You may be saying, but Ernie, how can you be profitable if you don't manage your risk? Well, like I said, we do the inversion. The inversion. I don't know who this is. I'm going to just take this quickly. Hello? Yeah, it's nobody. It said Chicago, so I thought, it might be the broker or something. We don't manage our risk. We manage our profits. It only makes sense because our risk is not worth managing. It's not worth our time because our risk is so small. However, we're steeped in profit almost every single trading opportunity. I guess this is important. Let's see. Hello? Yes, it is. Who's this? Hey, Ed, can you call me a little bit later? I am absolutely tied up at the moment. No, but thanks. Bye. Yeah, it was a broker. Wanted to know if we wanted to go with him. I said no. Because we're good. Sorry about that. I should just turn the phone off, shouldn't I? Should just turn the phone off. There we go. So, where was I? I was in profit management strategy. We do not manage our risk. And I know that sounds weird to you. And for most people that come in here, it is a hard lesson, a hard thing to strip away. They are skittish on every single trade when they don't need to be. As a matter of fact, our way of trading produces zero anxiety, zero worry that you're going to be losing some money, zero reason to manage your risk because the risk is managed and it's inherent in our strategy. And there's really hardly, well, like this morning, I could have said, man, that trade, it just went exactly the opposite way and we lost a small amount of money. We lost, potentially we could lose $112, $120 or so. But, if we get out right now, we can save 50 of it. And that's cool. Now, consider that $100, $120 or so. That was compared to our profit potential of $1,000, $1,200, $1,500. It really was quite small. So, in that kind of situation, a loser, only happens, let's see, I think that is our third loser in the past 3 months. So we're probably somewhere up in the 90 percentile range. Well, I know we are somewhere in the 90 percentile win rate range, where we're averaging about 150 to 200% return on our risk. So imagine, okay, so every minimal trade that we put on with about $100, we're making $150, $200 on that. All right. Now, I know that most people that are doing option strategies are hoping to God that they will get a 1-to-3 or a 3-to-1, rather, a 3-part risk to 1-part return on their trades. And they think that they're doing good. And of course, they have to manage their risk. We would never take a trade like that. That would be the smallest ratio trade that we ever take is a 1-part risk to maybe 4 or 5 parts profit. The smallest. That's it. Or I should say the largest risk. That's the largest risk we ever take. So again, like I was saying, the hardest thing that you will have to shed from your old way of trading is this whole idea of managing your risk. And for those that are steeped into, trading and learning all this technical analysis mumbo jumbo for years and decades, it's a tough job. There are some people here that are really struggling with staying with the trade because they're thinking, man, should I stay with the trade? What's the risk? What's the reward? Blah, blah, blah. And they jump out early. That is the biggest problem that we have. People jumping out of the trade early. And instead of making 500, 600, or 1,000% return, they make a measly 50 or 100% return, which by all objective standards would be unbelievably fantastic in their old way, their old paradigm. but that's their natural gut stink reaction, just to get out, right? When all they had to do is just stick it out a little bit longer, and then they'd be looking at 200, 300, 500, 1100% return like today. That is the difference. That's the difference between managing your risk and managing your profit. When I say manage your profit, we need strategies for figuring out how we're going to most efficiently bring in the profit. Because there's a fair amount of time we're going to be in that 150 to 300% range, and then some amount of time where we're in between that 300 and 600% range, and another smaller amount of time between that 600 and 1,000% range. And we want to be able to, when we have those 1,000%, 1,500% potential trading days, we would like to have at least one or two of our positions out there for a free ride. So we'll do something like put on 3 or 4 positions, take the first 2 off, and let them pay for the next 2, and then we have a free ride and let them go right into expiration, and see what they do. If they miss, no big deal. We still have a profitable day. But if they hit, then we hit big, really big. All right, it looks like we have some questions. Let's see, I need to pop this out and bring it closer to me. Pop it out and bring it down here where I can see it right above the camera. And we'll make the text a little bit bigger. Okay. Ken says, first day here and I learned something. This is much better than all those other Zero DTE sites. Thanks. Well, thank you, Ken. Lance, missed the second trade. Need to get my alerts to wake me up after a long day. Did you say pattern day trader rules don't apply to ES option trades? That's exactly correct. Because we're trading the futures, there is no pattern day trader rule. You could be sitting there with your $2,000 or $3,000 account and trade left and right, up and down 1,000 times a day if you want to. And you'll never be tagged a pattern day trader. Can't do that when you're trading the Zero DTE with the SPX or the SPY, because they'll nab you and then close your ass down for 90 days. Can trial members have one-on-one training? I'm sorry, but no, I can't offer that. I mean, what do you want for $20? You want to become a full-time member? Then yes, you will get one-on-one training. However, a trial member can ask me as many questions as they'd like. Of course, if they try to monopolize my time and make it more difficult for full-paying members, then you just have to be fair, right? So a trial member, we attempt to treat you just like a full-fledged member. But if you want to be a full-fledged member, then become a full-fledged member. It's not that expensive. All right? So that's really the only limitation that a trial member has. Other than that, they have full access to the trade room. They can call me. I give everybody my personal phone number. They can ask questions. They can attend our weekly group meetings where you can ask questions and go through some of the tutorials. Our reference materials are all available to them. So other than the one-on-one stuff, that's really the only thing that a trial member does not have access to. Yeah, broker making a margin call. I don't think so. Great point, Ernie. What is the key in making that decision? Stay or take profit early? You go into every trade with a plan, right? You're going to go in there with the hopes of making the full thing. You have to understand, what your odds are. It also depends on how the day, kind of unfolds too. There might be days where it's very obvious that we're not going to hit that short strike and hit it and pin it, right? Then there are other days that it looks like it's very possible. And so, you at the minimum, you could start out with, say, 2 contracts or 2 positions. And when you get to a certain amount where you could take one of them off and then the other one could be a free ride, maybe that's your strategy. As you get a bigger and bigger account, you can do that to a more finer granularity and maybe do it with 3 positions or 5 positions. And as you as price gets closer and closer to our target, you sell into that strength. And then finally, you would have at least some positions that are a total free ride because they're completely paid for, and just let them go and see what they do. I would say that is our strategy, generally. All right. So it was a good day. Last week was a fantastic week. We had one day that was like today. I mean, so we've had, 2 trading days in a row where we basically pinned our trade, meaning that we had the opportunity to make 600% or more. And then last week we had a really good day that was probably, mid-tier, a 400 or 500% winner. And then the beginning of the week also similar to that. So last week was a really good week. A little bit above what we would normally expect. And this week is starting off good. I mean, might as well just take a vacation right now. Why bother for the next several weeks? Okay, Richard's saying, if your short strikes on a butterfly spread are going to close out of the money on a profitable trade, does it matter whether you close out the trade yourself or just allow the butterfly to expire worthless? If they're going to be out of the money, you can just let it expire, right? If they're going to be in the money, then you probably want to take the trade off before it expires so that you don't risk getting assigned a futures contract. It's not a deal. It's not a terrible deal. It's just that, there is some risk associated with that. If you have a futures contract and then it's put into your account and maybe you can't react fast enough and then the market runs right away without any kind of controls or anything, that could be a problem. It could work in your favor or it could work against it. So my advice is if you have a futures position that is in the money, just exit before the market closes. That's all. It's pretty simple, right? That's what you want to do. You want to exit before the market closes. Hi, Ernie. We set up for audible alerts. Example, today's switch. Are we set up for audible alerts for today's switch? Are we set up for audible alerts? Are we set up for example, today's switch? I'm not sure what an audible alert is. What I do, I put the alerts in a special channel on the website. I'm sorry, on the Discord. And you can set up alerts either on your desktop or on your phone. And there's, for most, even for Android and for iOS, there's quite a bit of flexibility on how you set up those alerts. And they can come up just like an SMS alert or a text alert, Actually, they're quite a bit better because they're full of context. So you can do that. And so you just have to set up your notifications so that it is pegged on the alert channel. And then when you see an alert come there, your phone will alert you and you'll be good. Stuart saying, how would you address the overnight trading aspect of this, having to check alerts periodically through the night? You don't have to check them throughout the night. When I put out an alert, it's usually at around 9 o'clock at night. So there are basically 3 times I would say that I'm going to put out an alert, possibly 4. I'm either going to do it the day before, and that will be the night before because it's futures, and the futures open up at 6 o'clock the previous night. You give me some time to walk the dogs, come home, eat some dinner, and then do some analysis, and then I'm probably putting the trade out by 9:30. And then, once that trade's on, I just go to sleep. You wake up, look, we put on these asymmetric trades. If it doesn't work out the next morning, you just take it off. Okay, so you might be out $50 or $100. Big deal. Today was a huge move, and we were still only out like $50. So then in the morning, I will sometimes put on an alert before the market opens, after some of the bigger economic reports come out, and we get a feel for if there's a catalyst to the market and so forth. The next time that I might put out an alert is late morning or early afternoon. So just before noon or just after noon. So those are the 3 times that I might put out alerts. And as always, I always put them into the alerts channel on the Discord, so that should trigger a notification either on your desktop or your phone. And I don't know what else I can do, but I'm not sure exactly what you mean by an audible alert. I don't have the ability to, like scream in your ear or like do a flash, open up my lungs or whatever. I can whistle super loud. Watch this. Pretty loud. But as loud as that is, I don't think that you'll hear it. Andrew's asking, I have to check during the night. I live in New Zealand. I just do it. The money is worth it. Yeah, it can be. I don't sweat it. Sometimes I wake up in the middle of the night, like around the European Open. But that's because my, one of my dogs will wake me up. Yeah, one of my dogs will wake me up and want to go out or something. So let's see. I'm going to turn this off. There we go. So that's about the only reason why I'll be getting up in the early morning. And so I let them out, then I take a peek at the computer to see where things are. And if I'm smart, I'll go right back to sleep. If I'm not smart, then I'll let it draw me in there and start my day at 3 a.m. Probably not a good idea. But I guess being in New Zealand, you have a little bit of an advantage there. We have customers that are all over the world, in almost every time zone. So everybody has a slight advantage, disadvantage with those time zones. And because we're trading the futures, we're trading them 23 hours a day. So although most of the activity probably happens in the morning session of the United States session, but a lot of our trades, we're out of the trade by early morning, before the market even opens. Now, we were out of our losing trade this morning, and then we put on a new winner right before the market opened, and it turned out to be a fantastic trade. That can happen. Or I might have waited until noontime to put it on. How's the hand? I don't know. You tell me. How's it look? It's straight now. It's straight. It's not like this. It's not crinkled up like this. So, but there's a little pain associated with it, as you can probably tell. But I should be better in no time. Thank you very much for asking. I'm sure that grossed some people out. Sorry about that. All right. So this is episode number 4. I plan on at some point making these much more structured and a fixed time length. And I'll still take the questions and everything, and then rebroadcasting them or posting them to a podcast. So that's the plan, to turn this Monday, Wednesday, and Friday thing into a podcast and repurpose it out there so that you can listen to what we're going to do. And I'll mix it up a bit. I'll bring in some interesting topics. We'll talk about some strategies, techniques, methodology, that sort of thing. Possibly have some guests. I don't know. But that's where we're going to be going in the future. So, but yeah, the hand is almost, I won't say it's almost better. I mean, the stitches are still fresh. But it'll be better. And very, very soon I'll be back playing pool again. I already ran out of all of the painkillers, so I'll just have to suffer, I guess. But again, we had a great day today. Most of our days are great. Even the bad days are really good. And that's what it's like trading the Zero-DTE.com service. Am I right? Or am I right? So anyways, I want to thank everybody for showing up again. I'm going to make it short. Let's see, we're a half hour into this show. So thank you. What's going on with Bitcoin? Yeah, looks like I tried to catch a meat cleaver. Yeah, I had an affliction there that was causing my hand to kind of crinkle up like this, and they had to... That's right, Lucky. Hell yeah, it was a good day. What's going on with Bitcoin? Well, I think that China is cracking down on Bitcoin again, and so that's the latest thing. But the big news is Doge, Doggy Coin. It's been just dropping like nothing. Oh my God. Where do I get into Doge? I was waiting all this time for it to get down to 25, and now it's gone. It hit, I think, 18 cents this morning or today. I don't know, man. I'm telling you, I think you can make a hell of a lot of money doing the Zero-DTE trade than you can with crypto. Just a thought. All right. Now it's time to go. I have to get ready to walk the dogs, and then dinner, then do it all over again. We'll see you tomorrow. I hope everybody has a good night. Thank you. Let's see here. Where's the off button? Oh, we can never find the off button. There we go. See y'all.